All right, good afternoon. Can everyone hear me? Great, thank you. My name is Allison Filler. I'm with the Climate Collective. We are an innovation network supporting companies building at the intersection of climate impact and Web3. We are born out of the Celo ecosystem, which is a carbon negative blockchain committed to advancing the regenerative finance space. I have the great pleasure of working with three of the companies that you'll hear from today, Zenkin, Thalo, and Simplex DNA. So we're going to get into a brief presentation about their work and how Web3 is helping us to unlock climate impact. And then we will have a panel discussion with Chrissy Martin-Meyer from the Digital Impact Alliance of the UN Foundation. So please join me in welcoming them.
All right. I'll start this conversation that we're having. All right, so I'll start this conversation that we're having because I think it should be a conversation among all of us by introducing a few words and definitions just to make sure that we're on the same page before we dive in a bit more deeply on what's happening in the climate department of Web3. So I guess you're probably all familiar with a blockchain, which is an immutable shared ledger that facilitates the process of recording transactions and tracking assets. This usually also includes a decentralized consensus mechanism that allows trust in an otherwise trustless system. We then have Web3, which is a new iteration of Web after the Web2 that brought us interaction that incorporates this decentral technology and token-based economics into the web as we know it. Two more of these definitions, and here I would like to do a quick temperature check because I know we have a very varied, let's say, public here. Could you just raise your hands if you've heard the term regenerative finance or refi before? Okay, that's good to see some, but not all of us. So I will make sure to address. So the regenerative finance is a movement that is within the Web3 space and that aims to address sustainability challenges like climate change, biodiversity loss, resource scarcity, and also the socioeconomic structures that exacerbate these crises. So it's really a question of trying to price in externalities maybe in a way that they haven't been priced in before. And this leads us to digital environmental assets, which is a key asset in the refi space. It's a digital representation or digital twin of natural assets, so some forest land or mangroves, or I mean the most common one, carbon, that can be held on balance sheets and traded in markets.
So I'm just going to quickly come in here and really try to nail home this point about what the goal of refi or regenerative finance is. And really at its kind of most, the goal is to redesign money and how we attribute value. And the way we do so is we leverage blockchain technologies in the support of both nature and the SDGs. And so throughout this panel, we kind of sit on different parts of that ecosystem, but we're really, we're trying to talk about practical ways we can leverage blockchain to achieve impact, because ultimately blockchain should only be a means to an end. It's not, it's a trendy way of going about business, but really it's a means to an end. And when we think about refi, there are three main questions you have to start with. The first is, what do we value? So the economic system that we've kind of been leading or that we've built over the past 200, 300 years is really, does not value nature. It doesn't, we have market systems that have negative externalities because there's no accountability and there's no value accounted for in things like nature, biodiversity, until recently carbon. And so we first have to agree upon what we value. The second is, how do we account for value? So we're going to go into a discussion about biodiversity, which is a very complex and nuanced thing to try to value because scientifically it's very complex. And then the third question within refi is, how do we want that value distributed? We have the questions of equity, impact. These are very much at the forefront of what we do. And in designing our own businesses and in designing our own systems, I think that these are three questions that really kind of should be post-its upon the monitors of our screens as we go about our daily lives. So here's just once again a reminder that even within the verticals that we operate in, so we work in the carbon space, in biodiversity, but the SDGs are all incredibly interlinked. And when we're talking about value, we really need to use this canvas, this map, to better understand where we're driving impact. Even within just the carbon space, when we talk about carbon credits, often we forget that there's immense spillover effects within carbon, and so carbon prices reflect that. But ultimately, the SDGs are extremely interlinked, and we have to think about impact in a kind of nuanced, holistic way.
Perfect. Hi, I'm Jamal. I'm part of the Zenken team, and we've built a marketplace that launched roughly a month ago. I'm here to start to take you on a journey with us, because that's what we've come up with in preparation of today's session together. Because as has already been said, we're representing different areas and different businesses, but it was very important that we represent the refi space as a team in some capacity. So you will probably hear the word ecosystem a couple of times. So rather than some of us trying to aspire to cover the entire supply chain, we're pretty much focusing on being as good as we possibly can on our layer of that whole problem chain, I suppose, right? So we brought you the slide, which is pretty much just showing how today looks like. So nothing was changed. That's exactly how the carbon markets have been historically working. And our main point, specifically for the carbon markets, because there's obviously way more that is climate and climate finance related, goes off, but it would be a little bit too complicated to cover in only 90 minutes. So we're only touching on a certain part of it. So if we look into this now, there's the buyer side that is currently trading a market which is very hard to navigate. It's super fragmented. There are hundreds, if not thousands, of different marketplaces that are focusing on different areas in that system. There are quite a few intermediaries, on average something between 2 and 5 intermediaries that happen between the project itself and the respective buyer, no matter where they come from. And everyone in that chain and of intermediaries actually aims a certain cut to it without necessarily adding any value respective to quality to the entire process, right? So every carbon credit gets more expensive along the line without necessarily getting better. That's pretty much the current or the status quo. There is the MRV process, which is very limited, and some of it is still very analog these days, so very manual. People are literally flying through the world and measuring things by hand sometimes, which obviously cannot scale by any means. And then there's the project design bit, which leads to one of the most challenging aspects of it, which is the financing of the space. Because as I've said before, there's a lot of money that already flows into that space, but it's usually sucked up by the intermediaries in between. So the people that are mainly worried about quality and scalability on future projects are hardly seeing any additional money inflows, right? So that's one of the purposes of the refi system, which obviously translates to regenerative finance, that we're trying to get as much liquidity into the market as we possibly can, but make sure that we funnel it to the right sources so that we can actually properly unleash the true power of climate action, right? So that's the entire part. You'll see that principle coming out throughout our presentation. That's then a very, very top line version of what we represent. Obviously, there's way more to add, but as I said, we try to keep it as simple as we can for today. So they are the buyers. There could be corporates, there could be trading desks, there could be governments, and so on. They would go through a marketplace that aggregates the entire supply that is available on the blockchain. And then there are further aspects of it. Tokenization is part of it, and then the DMRV part, which is a simplified journey of how a project would come on chain. At the moment, we're talking about a transitional phase. So at the moment, it is pretty much only digitalized versions of what existed. So sometimes we're challenged with quality challenges, but all we've done so far is only digitalizing existing carbon credits that were out there for sale already. So if anything, maybe nothing got better yet, other than the fact that it got digitalized, but it definitely and certainly didn't get worse, which is a very important thing to remember when talking about that journey. The true power of on-chain credits and the technology will be unleashed once we evolve further onto that journey. And as I've said, my colleagues will talk you through part of that journey in a minute. This all serves the purpose of funneling as much money as possible back to the projects to enable them to address even more climate actions projects to well, live up to the demand that comes in the future. I'm not going through all of them, but obviously the slide is not that accurate. So the on-chain marketplaces are obviously on the right-hand side, but you get the point. So just to touch on a few, we all know that climate action cannot be big enough to live up to what we need to do to get anywhere close to the 1.5 or 2% goals that we set. So what we need are solutions that are able to not only scale a little bit, but actually unleash and catalyze a market that urgently needed it. And we've basically, talking about Zenken for once, is that we've launched our marketplace with already 20 million credits available, which compares to an average of 1.5 to a maximum of 2 million credits that you would usually be available on any not off-chain marketplace that there is out there. And that only means that we've started with the first supply source. So by the end of this year, we can already be somewhere between 50 and 70 million credits, and every single other supplier that will be on-chain would then be available on our marketplace. So what we're saying is that we're standing for true scalability and make available what is out there with a lot of future potential. It's definitely worth mentioning that the prices get significantly lower, which is one of the main advantages that the blockchain brings, because we can not only speed up all processes, but we can make them way more efficient than they currently are. First and foremost, by cutting out most intermediaries. But as I said, there are future technological aspects that we can add on top, which will be part of the tokenization process when we talk about that. But yeah, you'll have a full market price transparency. So for the first time, you actually have price transparency. You enable secondary markets in that space. So by, I would say, mid next year latest, you would have a fully functioning trading opportunity in the carbon markets, and whatever other natural-based asset will come onto those platforms in the future. This gives an idea of the scale of, and we're only talking carbon markets here, right? So we haven't even touched the biodiversity or any other natural-based asset. For clarification, just going through the bullet points, the first point basically explains what happened when the on-chain and refi ecosystem appeared, I suppose. So when Tukan, and they were meant to be here, but unfortunately couldn't be with us today due to health reasons, but Tukan started, I think, at some point in 2021 to appear on the market. And that year, they were actually the single biggest purchaser of credits from Vera in the world. And that drove so much demand in that space that the other aspects were triggered. So just to make sense out of the bullet points, right? So the volume in adding that demand to the voluntary carbon market doubled from 1 billion to 2 billion. and the floor price, which was initially 10 times lower, increased by the demand that was added through that space. And we're only talking about the first small steps and a closed on-chain market, as in not accessible for the outside world, which has changed just very recently by adding us to the mix. The last bullet point is a very relevant one as well, because the 100 billion are pretty much widely accepted as the future market for 2030. Why we go in with 500 billion is down to the fact that we will enable the secondary markets. So therefore, with the trading volume that comes in, and bluntly speaking, we're enabling and taking advantage of capitalism in a positive way. So we make it attractive to make money with natural-based assets and climate assets, and therefore we attract a significant amount of liquidity, which will therefore still be addressing the right reasons, I suppose. So it will flow into climate action, which is what we want in a regenerative finance environment. That's just to give you an idea. So we've almost oversimplified it for today, but that's actually how Zenkin would look today and will look in the future. So you will have the opportunity to source single projects. You can see here as an example, because those are the ones that we started with, is B0, the rating. And you would see the location, you would see the vintages, and the amount of credits that are available as we speak. Which is worth mentioning from a financing point of view, and we'll touch on that a little later. The project that you would see on the top left corner has an arbitrage potential between on-chain and off-chain of roughly $10 to $11 at the moment. So on-chain you can get it for $2.60 and something, and off-chain the exact same project would be traded for something between $11 and $14. And there are more than 220,000 available. And that's just one example of many more, just to show what potential there is in the future.
So I'm going to talk a bit about what Thallo does and how we aim to leverage blockchain to sustain practical impact. So my own journey with blockchain started roughly a year ago, and when I first entered the ecosystem, let's say, I was often frustrated that people like ourselves often spoke in abstract, right? So in theory, blockchain can make things more transparent. In theory, everything is more traceable, but we like to also think about practical implications. And so when Thallo came about, Thallo is essentially an exchange that also allows for the buying, purchasing, selling, and retirement of carbon credits. But when we first kind of ideated about how best to add value to the market, we looked at startups. What do startups do? They solve pain points. And you can be very easy to find a McKinsey report these days that says the market is going to scale 30x by 2050 or however you want. But in order to do so, whose problems need to be solved? And our answer was quite quickly project developers, those driving climate impact on the ground, because these are the people who face project development problems, implementation delays, financing risk. They deal with registries who ultimately set standards that they are held accountable to. And so if you can start solving via blockchain some of the problems that project developers face, then you're really unleashing impact and you're really making a big difference for climate. And so that's what we hope to do. So on this slide, you see the benefits with regards to blockchain, but specifically the practical benefits that accrue to project developers. So for instance, by using the Thallo exchange, they have easy to use direct market access. So you spoke about disintermediation. In an ideal world, you would never have a broker who takes a fee simply because he or she knows that they can get a better price from identifying a buyer. You want those buyers to be able to find those sellers directly, and that's what democratization of access allows you, and that's what blockchain allows you with regards to the carbon market. again, no intermediary and 0 transaction cost to the seller. The reason we do that is because we believe that the supply side, the project developers, the sellers, they face innumerable challenges in getting to these markets and understanding the best prices that they can get for their carbon credits. And so we want them to kind of attain the highest amount of value capture they can. One big problem in this largely over-the-counter dominated carbon market is the fact that no one really knows what the right price is. And so if you're putting yourself in the shoes of a Colombian project developer with a mid-sized operation who is trying to ascertain what the market price for a really high-quality nature-based project is going to be, there is no market for him. There are no real good benchmarks for them to understand. And as a consequence, if they don't know what the price is, they can't secure very favorable financing deals. And so if they can't secure financing deals, then they can't get finance, and then they can't scale projects. So there's so many different pain points and so many blockages that you're able to solve by trying to make the market more effective, including via blockchain. We talked about quality. One of the benefits of blockchain is this element of transparency and traceability, such that all of the project level information, all of the audit reports, all of the information that is relevant to the climate impact that corporations or individuals need in order to scale this market with integrity, all of that can be stored on chain, and it's very easy to do so. One thing that gets me very, very excited about blockchain's potential applications here in practical sense is the fact that it's composable. Ultimately, what blockchain is code, right? And so we're in creating a digital copy of the carbon credit in this instance. We also have the opportunity to create code. And what we're doing at Thallo is we think that project developers should access the secondary market. So right now, if I'm a project developer and I sell my carbon credit to you, and you wait 6 months and then resell your carbon credit at a 50% markup, I will never attain any percentage of that markup. And that's a shame, because I'm the one who's actually leading the project. So rather than try to avoid or try to eliminate that secondary market, our idea is to put in royalty schemes such that as we bring things on chain, you encode into royalties such that any secondary trade at any point in the future, noting that the highest quality projects get traded sometimes for 10 years and exchange hands 20 times. Royalties go back to those project developers. And no one needs to be involved in that. We don't need to be involved. That's a direct payment directly to the supplier. And these are just some of the innovations you get with blockchain and some of the practical benefits that we're hoping to accrue to those driving climate change projects on the ground. We spoke a bit about demand-side segments. I would like to kind of also reiterate the importance of how blockchain can democratize access, both on the supply side, giving these suppliers access to new markets, but also on the demand side. Individuals like ourselves currently cannot buy carbon credits at ease. And the reason being is that there's a lot of barriers to do so. You might need an account with the registry, or you might need to pay a marketing platform 20+ markup simply on the cost of the credit. Well, by opening up these demand-side streams, by democratizing access via a platform like ours and Senken, anyone can engage in this market. And so it need not be only for retiring for our own purposes, but actually coming into this market and agreeing that this asset, carbon credits in this instance, has value, and I want to engage in this, and I want to add liquidity to this market and to help climate finance in a way that I know is going directly to the project developers. So that's a really important part. One last kind of specific characteristic of our exchange is that we reject the commoditization approach. That is to say, a lot of initiatives currently, what they do is they'll pool carbon. So they'll say, this pool of carbon is relatively similar. I'm going to put them all together, bundle them up, and issue a token. And that token has a one unitary market price. What that's quite good at is it adds liquidity to the market. So it makes the market flow in a bit more liquid way. It adds depth. What it also does, however, is it disincentivizes quality. is such that if I'm a project developer and I know that I'm going to get a unitary price, just a token, what incentive do I have to incur extra costs to raise, to achieve extra SDGs, to achieve extra positive externalities? And likewise, from a corporate buyer's perspective, does the chief sustainability officer or chief financial officer really want to have on their books or in their sustainability report the fact that they purchased X numbers of tokens without really understanding what the projects they were backing were? And so we believe that kind of personalization, that project level information is worthwhile being kept, and blockchain once again can allow for that. So that was just a quick intro of Thallo, but it's really a case study, hopefully, of how these marketplaces, yes, it's another marketplace, but we're really trying to add value in distinct ways, both on the demand side and on the supply side. And then the reason we chose to go into carbon first, both of our own presentations, is because it's the most mature of environmental assets that is currently being looked at by the market. But what is so interesting about refi is this idea that we're, for once, attributing value on environmental assets that have never been valued before. And so we're trying to change the economic system we're tinkering with the economic system, changing the way we account for value without trying to change the economic system as a whole. And so without getting systemic change, you get systemic impact, which is really quite interesting. So with that said, I'm going to transition to my colleague, who's at the very forefront of biodiversity and something a bit more complex than carbon. But hopefully carbon is paving the way, and biodiversity and other kind of ecological benefits will soon follow.
Yes, thanks so much, Nick. And I guess to start this off, I would like to start with the environmental problem, because we said refi is here to solve these problems in a profitable way. So we are actually in the midst of the 6th big extinction event in the history of life. 1 in 8 animal and plant species is at the risk of extinction. And the worrying part about this is that we don't even have any real information on that. Over 90% of Earth has no biodiversity information whatsoever. And 80% of observations that we do have in GBIF, which is an aggregate of different data sets, are from only 10 countries. And these are usually the wealthy countries in the global north. And from these biodiversity records data, only 2% of the species that we think exist are actually recorded. So how can we fix this problem? It is quite clear that what we need is a global biodiversity monitoring framework or platform. We need it for scientific use, we need it for policy making, and we need it for valuing natural capital. So many people talk about natural capital, but we don't even know where our natural assets are. We haven't done the bookkeeping on them, so that's what we need to get started on. But there are also business needs relating to biodiversity measurements. Biodiversity impact and dependency reporting is a big part of the upcoming Task Force for Nature-related Financial Disclosures framework. Biodiversity scoring of investments and impact markets are a big coming aspect, part of the work that different financial institutions do. There's a huge market pressure for green assets that can prove that they are not greenwashed. And in addition to that, there are already a lot of biodiversity monitoring projects that are done in isolated manner for a wide variety of reasons. And let's say the refi-like question to ask is, can we align these business needs with the needs of our planet and our biosphere, or maybe to put it in the theme of this conference, can we build a bridge between the two of them? And I think the answer to this is that yes, we can, but we need a few things for it. 3 things to be precise. We need a cheap and an effective way of monitoring biodiversity at the species level, so not just looking at satellite data, but really knowing in detail what's there. And we need to decouple the payment for measurement and the payment for data use of biodiversity. And lastly, to achieve this in a scale that is relevant globally, we need a global network of samplers. So let me just go through these 3 points. One cheap and effective way of monitoring biodiversity is environmental DNA. So I'm a biologist, I can talk about this at length, but I'll try to avoid it. It is actually really simple. All you need is you can take some water from a river, from a lake, 2-3 liters is more than enough. You can filter this water on some blotting paper, and you can send this piece of paper in a normal letter to wherever you need. Then you can extract the DNA from this paper in multiple steps, put it in a sequencing machine, which is really, really established because that's something that pharma companies have been doing for last decades. From there, you get a data set out of it where you can see, or we can see, which species have been found and to what extent in this body of water. So that is an extremely cheap approach, and it also scales a lot quicker because you can automate almost every aspect of it. But now we need 2 more points. Namely, we need a way to decouple the payment for measurement and the payment for data use. And we need a global network of samplers. And at Simplex DNA, we work with a Restore global network of restoration projects to get to this global network. But let me just walk you through to how we try this decoupling and where this network fits in. So in the top right, you can actually see a buyer of a biodiversity token. In the minting process, this buyer effectuates a service payment that goes to a sampler in the affected region, and it goes to a sequencing lab that allows the data sequencing and the minting of the token from that data attached with time and location. The buyer then receives the token, of course, but the token has also created a hell of a lot of data that is stored in the open biodiversity portal. This portal is accessible to university research and public institutions, but it is licensed for commercial use, such as in the different examples outlined in the bottom right. This commercial use generates royalties in such a streamlined fashion that only Web3 can do, which then go back to the token buyer and to some extent also to the other stakeholders. So this really allows a profit-driven motivation to sequence and to measure biodiversity, where previously measuring biodiversity has been done by research institutions only. And I guess now we've gotten quite deep into the details of how one of these refi projects can work and can achieve its vision. And I want to let Nick take us back to a perspective a bit further out and go a bit more, broaden a bit the vision of the refi world as it exists now.
So we struggled very much to get 3 takeaways, and I don't think there's even consensus as to what these 3 takeaways are. But if we can leave you with 3 ideas. The first is that technology, if well designed and implemented, is unleashing the power of climate markets. So if you look at the carbon market, it's faced all sorts of challenges, right, left, and center. And technology, not only blockchain, is finding ways of solving these. And so we're very excited about the future. Within that, the refi space is additive, but it requires inclusion of all stakeholders. The reason it requires inclusion is because you cannot have startups, innovators working in a vacuum. You can't have people creating great ideas without leveraging decades and decades of scientific thought on biodiversity, on carbon. So you really have to have an inclusive approach, and that's why we've all sought to speak in practical terms and hopefully in layman terms as to what we're trying to achieve here. And then finally, it's all about enabling environmental impact to coexist with market forces at scale. The reason we're tapping into markets, the reason we're tapping into supply and demand is because we're not seeking to reinvent the wheel. Rather, we're seeking to add value and add accountability on nature-backed assets in a way that has never happened before. And we'd invite you to kind of welcome us on that journey, challenge our assumptions as we do so. And in that vein, I would invite you guys to have a Q&A with us now.
Or automatically on. Great. Well, thank you so much. Keeping on time, which makes my job much easier. Again, my name is Chrissy. I am currently the director for something called the Charter for Digital Public Goods, which is not related to this, well, a little bit tangentially, a joint initiative of the Digital Public Goods Alliance and the DIAL, the Digital Impact Alliance at the UN Foundation. So we really wanted to make sure that this was a discussion, so we're going to pretty immediately put you all on the spot to come up with questions. Honestly, we're not sure how much of this is you already know, how much of it's not clear. I was invited to moderate in part because I'm an outsider. I'm really not working in this space. I have some limited exposure to blockchain, so they were hoping I could ask some questions that could help translate it. But you all are the best people to ask the questions of what's clear, what's not clear, or where do you want to push our panelists. So I'll start out with one question, but please be thinking of yours because I'll be putting you on the spot just after that. So again, I'm currently working in the space of what we're calling digital public goods, which are open source technologies, protocols, algorithms that are able to, we're trying to really promote the idea that parts of the digital ecosystem are as important as roads or bridges, right? Everybody should be able to use them and everybody should be able to build on top of them. So I heard a lot in your presentation, which is something we also try to emphasize, that we're not trying to take the profit out of the equation, that we do think that once you build these public good networks, you're just lowering the cost of entry, but that you're creating a lot of opportunity for innovation and private sector profit potential on top of it, because that's where the incentives lie. So I'm interested to hear a bit more about which parts of this ecosystem are publicly funded or require kind of a public goods approach, because we see that there's a lot of market, a lot of profit potential in here, but knowing that this is a profit/UN nonprofit conference, which part of this is a public good? I heard a bit about the open data portal. Who manages that? Where does that need to be supported, et cetera? So pass it off to whoever wants to.
Yeah, I'm happy to talk a bit about this from the simplex DNA perspective. So indeed, I guess it's a bit of a weird chimera in a way that, I have to say, let's say the system where we try to achieve all these things, if this is built on Web3, once deployed, this is beyond the control necessary of a particular private entity, and thus can be treated as something that belongs to everyone. With regards to financing, I guess this will really be project dependent, and I think I know from our side we are aiming, and we are also part of both public and private financing initiatives. On the other hand, we have the token, which is of course something you can own and is thus a private good. So I think it's really important to differentiate stakeholders and shareholders that are, let's say, active in the market, and the underlying system, which is already there as a sort of, almost as a sort of digital infrastructure. I think you mentioned the word before. And different projects in the refi space find different methods of separating these two aspects. So for example, at Simplex DNA, we have two entities. We have a non-profit entity that is governing the entire infrastructure of this open data portal, of this minting process. And then there is an Aktiengesellschaft in Switzerland, so just a standard company that is actually driving the entire sequencing process behind this. And in this way, we aim to separate these different parts of the problem and to also prevent, let's say, incentives that are actually detrimental to the system.
Yeah, I would say that kind of public goods and public sector involvement in what is otherwise called the voluntary carbon market. So the voluntary carbon market is obviously without government intervention per se. But that doesn't mean that governments don't have a role. And actually, I believe that they have a huge role to play. So specifically, governments legislating carbon taxes, for instance, can incentivize for instance, the use of carbon offsets as a means of receiving discounts on taxes. What that does is that provides climate financing to communities project developers who are leading projects on the ground. Likewise, I think that these markets are currently quite nascent. The market, as Jamel said, is only around $2 billion, but it is to grow. And this is an important source of climate financing for countries as well. So in the news of late recently, there's been a lot of news about the fact that certain African countries, for instance, are looking at the carbon markets and tapping into the fact that they could avoid the deforestation of their Central African forests, for instance, by getting paid to do so via voluntary markets. And if we can make, via refi, via blockchain, these markets more effective, more efficient and more transparent for them, that's really in bringing them on board. So I would say that.
The thing that I would add is that I wouldn't necessarily see financing requirements in the space, but what can definitely and certainly will help quite a lot is the regulatory aspect or the thought leadership aspect, because we can only say that we would invite any official body along to have a look at that ecosystem with us to make sure that if we've missed anything that still should be improved on any scale, then I think we would want to do that right from the start. But we would certainly benefit quite a lot if we would be able to present joint thought leadership pieces together, white papers that come with official bodies like the UN or any other bodies. So I think that would, on one hand, help to maybe not regulate, but help to understand that official requirements are met, and at the same time promote a specific space, as in the refi space, to develop further. That's probably how I would summarize it.
Great. Well, thank you all for entertaining my first question. We'll look at the audience now and hope that some of you can ask. Would you like to clarify? Actually, he's going to bring it to you.
Hello, I'm working for an insurance company and interested in the market. So I was very interested to listen to your point about inclusion, because one of the critics of tokenized credits is that it actually adds a layer of complexity in the carbon market. So my question is, how do you work with the international standards such as Vera, Gold Standard, or other type of standards? How do you cope with that?
So yes, there is one of the arguments is against blockchain being applied to carbon markets is that it's fragmenting an industry further, which is already sufficiently fragmented, if not too fragmented. I think the point about democratization of access is super important here, because ultimately the market is dominated by a few key players, right? So when you're talking about project developers, you have project developers like South Pole. They control end-to-end value chains. When you're talking about registries, you're talking about Vera and Gold Standard. They have a monopoly on standards and methodologies and what have you. So the market is fragmented, but it's fragmented for all the other people. And we know very well that monopolies are highly inefficient. And so what blockchain can do is unleash the power of the small project developer, because all of a sudden they can tap into new markets that weren't otherwise available. It can also unleash the power of science in developing new methodologies that can all be on-chain, transparent for everyone to see. And so the challenge remains is showing how legacy actors like Gold Standard, Vera, and so forth can join us in this journey. Because it would be an awful shame to have two different markets, one which is highly innovative and uses on-chain credits, and another which is purely OTC, which uses the kind of the tools of the old world. But I think that it's a good question, and inclusion needs to be at the very forefront of what we're thinking. A last point I would say is that as part of the journey, in 5 years, when you're talking about inclusion, you're talking about involvement of local communities, perhaps. And so if you have fully digitized MRV, so monitoring, reporting, and verification, trustless data picking up from sensors or satellites elsewhere, and then smart contracts that encode conditional payments based on achievement of that data, All of a sudden, you don't need third-party assurers because it's all on-chain. It's all just systematic. And so you're actually making what is otherwise a very fragmented value chain very short. And you're making the market more efficient in that way. Don't know if you had anything to add.
I think it's about building the bridges, right? So, but that's the only point to add. And then we have another question already, which is good. So I think it's about coming together. So we talked about policymakers before. There are definitely extensive talks with Vera and Gold Standard, just to pick a few. Gold Standard just announced on the Climate Week, was it last week? Can't remember. Recently, that they expect the entire carbon market to go on-chain fairly soon, and that's from their perspective. So that's what they announced on there. So I think it's the only important thing to that point is that we make sure that we all sit around the same tables, talk about the same standardizations and requirements for the future, and I think that way we can ensure that we combine the best of both worlds. It's probably how I would summarize it.
Hello, first of all, thanks for the conference. So I also work in Web3 and impact, and I was curious about your view on this announcement of Gold Standard, notably, because they also announced in their webinar that they will want to check every tokenized carbon credit in the future. So in a way, they are extending their monopoly to the tokenized carbon credit market. And I just want to have your view. Do you think that tokenized carbon credit will enable to completely decentralize the verification, the auditing, and enabling like small community to emit carbon credit? Or do you think that this actor like Gold Standard Vera wouldn't be disrupt, and that you should work with them and continue to develop with them?
I think my answer is similar to quite a few questions. I think it's one problem at a time, is what I tend to say in those. So if I have the choice between Gold Standard and Vera just keeping their doors shut and don't even consider making the next step, then I would be more concerned. Making them join the movement for now, even though they do that in their very individual and specific way for now, is fairly understandable, right? So they had a market to themselves, or almost to themselves, for quite some time. So it's quite, I think if we would be in their shoes, then we would probably have the same concerns. So what you're doing is, from an economic point of view, you're protecting your own interests. So I think it is fairly straightforward that they would handle it that way. So let's take them on a journey with us, is probably my point of dealing with that, and see how we get further from there, because there are way more problems in that problem chain to solve we haven't just touched.
So also just kind of further clarification specifically on the Gold Standard. And for those who are not in the carbon market, Gold Standard are a registry who set standards and issue carbon credits. With regards to the need to check every project, if checking a project, it means safeguarding quality, then yes, absolutely. And I think that they should continue to do that, because they've been doing that very well. And the market cannot scale with, if there is a sense that some of these carbon credits, whether tokenized or not, are not high quality. Because at the end of the day, if you're buying bogus credits, that's not helpful to anyone. And so that's detrimental to all. That said, they are actually being, Gold Standard and specifically, are being very open to how best to innovate. And people often say, oh, well, the registries recently put a moratorium on digitization of assets. Well, in fact, we actually welcome that moratorium, because ultimately, all of us need to be creating similar models. We need to be singing from the same song sheet, and we need to create, avoid further fragmentation, because that would be quite catastrophic. And so if we can get together as an industry through open consultation, through inclusive processes, and create models that work both for the legacy players and for the kind of innovators in Web3, then that's really how we're going to make this market scale. And so bringing them on board is super important.
I think the gentleman in the back has waited the longest.
Thank you. With regards to building the bridges, having a two-way bridge would probably be the area that would bring price discovery, seeing as the actual purpose is retiring the offsets and allowing the transparency for the better carbon projects to be recognized and that recognition being part of whoever's retiring it. The infrastructure needed for that is, I guess, complex when it comes to how the pricing works on both sides. Could you speak to how that might improve? Because I think whether the registries get on board or not, that's a matter of time, but the actual price discovery mechanism is the critical building block that's needed to bring liquidity and trust. How is that two-way bridge evolving in your view?
So great question, and it's almost as if I planted that question, because Thalo is currently in very advanced stages in building a two-way bridge. So yeah, we believe, when we agree with you, I think, in the sense that when you on-chain carbon credits, it should be just as easy to bring them off-chain. Now, with regards to price discovery, we do think that one of the best benefits of blockchain is this idea of price transparency, ability to understand what the market is saying about carbon credits. And there may be arbitrage opportunities between on-chain and off-chain credits. We're already seeing it in this market, and that's simply going to be. But hopefully, in the long term, the market will decide. Is on-chain credits where these carbon credits should lie, or is it off-chain? And I don't see the market segmenting in like a perfect 50-50. I think it will choose one or the other. And if it is on-chain, then you're going to really benefit from that transparency and that price visibility. I think you have a follow-up question.
Sorry, and I hope you didn't plant this one either. How would that go on for future commitments and not just tokenizing current offset certified projects, but allowing the refi financing structure to accelerate the financing of future supply? That's the other big block on liquidity, is actually bringing that supply and accelerating, because certifiers are just going to be bottlenecks anyway.
Yeah, so with regards to the two-way bridge, and just in general, well, perhaps you can speak most to financing.
Yeah, there are a couple of bits. I mean, one, luckily, we're only representing a tiny, tiny proportion of that refi movement. So there are quite a few players out there who are addressing specific areas of those problems, and pre-financing is obviously one of the biggest ones, alongside insurers and so on and so forth, right? Because that's why I tend to speak about problem chains, right? So whenever you touch the first one, you open up another 3 or 4, and then you just handle it along the way. But from a financing point of view and two-way bridge, I think the question at hand to a degree is, how do we really properly unleash the full potential of the blockchain in that context? I think the two-way bridge would always come with the risk of double counting and so on. There might be a delay in that entire picture and so on. Plus the whole system of smart contracts that Nick already spoke about will always be limited with that approach, because there's always the manual step in between. It is not really fully automated. So I guess the question is, do we want to trust the technology at some point to do its thing? From a verification and measuring point of view, all the way to royalties, right? Because we've already talked about royalties for product developers, but one of the things that I'm probably personally most excited about would be royalties for communities that can actually permanently and long-term gain wealth from participating in a secondary market and so on, right? So, but all of those are not hindered, but at least limited if we talk not fully native on-chain, I suppose.
I think we might have a burning question or comment. You look like you wanted to say something.
I want to say many things, but first of all, thank you very much. It's a little bit frustrating for me, at least, to hear that we want to follow Vera and Gold Standard and kind of collaborate with them in that sense. I understand the scalability part of that, but someone told me that if something worked for 20 years and have billions of dollars and nothing changed, there's a problem with the system. So I was hoping that Web3 and this type of technology can bring something new. And I was speaking last week with someone in Congo that sells 50,000 tons of carbon, quite a lot, big forests. and they get $3 per ton, and they know that Vera sell it to the market for 20. So, I mean, that's the real problem, or part of the problem. So we have money, enough money to finance the process and bring it more to the ground. Yeah, but I think if we are dependent on Vera or Gold Standard, we will not change the system because they are too comfortable. So yeah, how can we really do something to change and make, because finally, what's the impact on the ground? What's the impact on the developers and on the communities?
Yeah, I mean, if I could wave a magic wand, I would definitely have Vera and Gold Standard keep their standard-setting role, when in regards to how scientifically robust those standards are set. Perhaps ask them to be a bit quicker when it comes to more innovation and methodologies and so forth. But absolutely not. There's no need for them to be the gatekeepers of kind of issuing carbon, 100%. You touched on the point of scale, right? So when we're talking about innovation, we cannot kind of innovate in a vacuum. I speak to project developers most of the week, right? And if the refi community didn't work with existing mechanisms, then we're causing what she mentioned earlier, which is further fragmentation. So, I mean, just anecdotally, I remember speaking to a Brazilian project developer who had, in the past 2 months, been bombarded with, I think it was something like 5 or 6 different refi projects who all claimed to be able to offer them better prices and whatnot and whatnot. So I think that speaks to the need to create kind of common models, to speak from the same kind of song sheet, and to help entities like Gold Standard and Vera no longer be blockages in this market, because there is a certain point where the market will just go without them, and they know it. We speak to them quite often. They know that they're holding everything back, but they need help to allow them to scale. And digital MRV is one of the best ways in order to do that.
Yeah, I think that's the thing that we're waiting for, just to sum that up, right? So I think all we sit here couldn't agree more with you and what we want to unleash, like for sure, because the money should funnel to the right people, and we wouldn't say that that's currently the case. But the DMRV bit is currently, as of today, not there yet. But it is developing insanely quick. But we need to get the DMRV right. Otherwise, we would be exposed to quality challenges, and that would hurt the market way more than a quick solution that we start just that 1 month too early. How will the standards evolve in its entirety, right? So will we need them? Are there different solutions? Are there digital solutions? Those are the questions that we need to answer over the next maximum 6 to 18 months, I suppose. But like once we have the DMRV in place, then we can talk standards. But that puzzle piece has not been solved yet, at least not to a decent quality standard.
So as another fellow regen in the room, I understand everything you're saying and what you're doing.
That's good.
Yes, one of the few, I'm guessing. Can you guys share a little bit about like your capital raising structures and like how much you went to public markets, how much you did coin offerings, like how'd you get to where you are today?
So yeah, as of today, I think I can disclose. So we generally we speak to all the different investors who are kind of interested and curious. Specifically Thallo, what we did is we just raised a seed round. We raised $2.5 million. And that will allow us to kind of build the systems, the marketplaces, the relationships, and so on and so forth. Which capital markets did we go to? There are known kind of venture capital institutions, entities who are kind of prominent in this space. What's quite interesting about them is that they're betting on the space and they're not trying to find winners. And so you'll actually find quite a lot of kind of VC funding kind of scattershot around the ecosystem. What that does is that really enables a lot of collaboration, right? Because if the same funders who are backing one project are backing the other, you'll instantly know on an advisor call, for instance, if there's any inherent duplication, if there's areas for complementarity. And so that allows for this market to not only be innovative, but to avoid duplication and hopefully fragmentation as well. I think that kind of answers your question.
I think before we get kicked here, there was a Cello Foundation and the Climate Collective, which happened to be here, are like super supportive for the whole ecosystem with grants, amongst other players. But I think so we're just about to close our seed round. We will be in the region of 5 to 6 million when we're done. We've already secured the lead investor, so we're just heavily impact focused. So we're in a very good place. And considering the financial markets, we can definitely consider ourselves lucky to be that relevant at the moment, and lucky from a timing point of view, I suppose, that there's so much money going into impact/sustainability and the technology aspect that we can definitely rely on very good partners, but it starts earlier. So that's why I think the Cello part, I think the crucial part is the pre-seed phase until you get to a certain stage, which is not only a vision or a crazy idea. And there happen to be quite a strong network of business angels and small VCs that are quite present in the market at the moment, and are super supportive in that as well. So I think we wouldn't have been anywhere close to that success with our seed finance round without the people that we had on board with our pre-seed round, because we had almost only warm introductions to their entire network, which helped massively to close the finance round this time. So luckily, money is not the issue at the moment.
But all traditional fiat, so we're clear. All equity fiat, or you're doing blended?
Equity tokens, different. It depends if the project has a utility token associated. If so, then they can invest in tokens as well as kind of equity-based funding.
Can we talk afterwards?
Luis, did you have one answer?
Yeah, I can just say this from the Simplex perspective. So Simplex DNA is an early stage startup, and we're also currently in the process of raising our first round. That being said, we are being financed by, as you mentioned kindly, Climate Collective and Cello grants. And we have been building our expertise in, say, commercial eDNA sequencing over the last year. So there is a very traditional Web2 business model attached to this company that already allows to generate revenue and bootstrap and test what we are trying to build.
I did see a few hands. Did you still?
Questions, Becker, thank you very much. Just a quick question. If you want to disrupt somehow the value chain, and for some time you have to live with the warehouse out there and probably try to integrate them, but adoption at the end happens with buyers of the carbon credits, and only that, if that materializes significantly, I guess you are taken more seriously by the traditional actors, so to speak. So how do you increase the trust and the business noise, so to speak, on the buyer side of the carbon credits? Thank you.
I think in the end, transparency and price discovery are king to start with, right? So, I mean, obviously, in the end, it is a B2B business model, mainly at least, because that's where the scalability sits. The corporate partners are, in the end, the ones that we aspire to work with. In the short term, we think there is a temporary goal to get there, because if you know the market well, then you know that there are already quite a lot of trading desks out there who are fairly familiar with trading carbon credits. Most corporates that we would speak to on a daily basis these days are one step before on that journey, as in they are still getting their head around their own carbon footprint, right? So they are still in the process of understanding scope 1, 2, 3 emissions and so on and so forth. So we're basically a little bit too early on that journey with them, right? But like there are offset partners, big consultancy agencies, pretty much any big consultancy is building a sustainability arm these days. And they're basically solving problem number 1 for the corporates, which is making them or helping them to understand their carbon offset, and then they help them as well to offset it. For that particular group, we have a benefit that is unseen for them, because all of them at the moment would have to own that supply and carry the inventory risk, and that's something that we would take completely away from them, which makes it a little bit of a no-brainer for them to at least start interact in some kind of capacities. And we believe that this is the starting point for 2023. And from there, we can evolve from a market perspective into the other areas once we've already started to, one, build trust, but then with that data that we can gain from those transactions, we can actually start to showcase analytics, price development, and so on and so forth, which will slowly but steady win more players in the market over.
First of all, thank you very much for this very interesting discussion. I think trust is key. Today we spoke about actually two opportunities. One, eDNA, which is really scientific data, as an input into a process, and then actually the optimization of an existing process, which is actually the carbon market. So my question is, actually we've heard actually now for a couple of days that actually new types of scientific data would be accessible in nature capital. So I was wondering, do you see an opportunity upstream to develop new types of products which go beyond tokenization to address negative externalities linked to biodiversity, carbon, or other types of natural capital? Thank you.
So I guess first, short answer, yes. But to expand, I would say there is tokenization is not just one thing. So there are many different aspects of tokens. You can be building the one that is maybe people are most familiar with is just is an offset token, and everyone sees the value in that. But there are also tokens that can be used as different things. For example, you can have tokens that are seen as an impact certificate of maybe more flexible impact, but that might be interesting for certain more philanthropic investors. Another thing, and that's actually what I've been describing before, is a data token. So we're not actually tokenizing any change in biodiversity or change in carbon. We're just the thing that is tokenized is a particular measurement at a particular point in time, and what the revenue in this case is generated from the data access. But there are multiple, I mean, in the refi space, many different business models that have different approaches with different data sets. And of course, you can also imagine combined offerings in the crypto space where, for example, an investment in a particular, let's say, project that has negative externalities on biodiversity can be coupled intrinsically as also almost as sort of an inset with measurements from eDNA or other or remote sensing or other modern DMRV technologies. And I think the Web3 space is really unique in that way, as there is no need for one person or one group to build that, but many different experts can contribute and come up with new solutions. So I think right now we're talking about classical tokens, but in a few years there will be more interesting products out there as well.
Yeah, and I completely agree. And I think we should also be very upfront about one of the challenges of having multiple nature-backed assets, and that is double counting, once again, right? So carbon credits baked into the price of a carbon credit is a lot of these positive externalities, right? So a corporate will pay a premium if they know that, you know, this carbon credit leads to economic development outcomes for women in sub-Saharan Africa, by way of example. Or biodiversity benefits in the Amazon rainforest. And so if all of a sudden new types of biodiversity tokens or other kind of tokens are being kind of juxtaposed and sold alongside, we need to be able to find ways to disentangle them so that you're not selling twice the same thing. I don't have an answer as to how that's going to be, but for sure that will be a really important challenge for the market.
Great. Well, you all have made my job very easy, so thank you. Clearly, we had a educated crowd in here who's familiar with the topic. I think we can probably start shifting into just thinking about the key takeaways. And I was going to ask, you know, how is this relevant beyond carbon markets? But I think a lot of what you just said would answer that question. I think what I've heard, you know, I said to them earlier, being less familiar, but maybe have with Web3, but having dove into blockchain for financial inclusion early on, I think the first decade or so of blockchain excitement, part of the disappointment was that a lot of the promise of decentralization wasn't really delivered. That a lot of the use cases were actually put onto permissioned blockchains where perhaps they were more technically secure, but there was still the same sort of centralized authority. So I think one of my key takeaways is that maybe it hasn't happened yet, but that it's exciting to see such a push to really overcome some of those challenges and really move to some of those benefits of decentralization, not only in terms of the technology, but decentralization of power and finance in ways that can truly deliver impact. So that's my key takeaway. Also, the one problem at a time, I think I'm going to use that in my job. But I would love to hear from each of you just what's one key takeaway if the audience kind of forgets everything else that they heard today that they should walk away with after the session.
I always forget, I'm going to hear theirs and then I'm going to want to say a different one. But I think my key takeaway is that, as always, blockchain is a tool. It is not an end in and of itself. And the moment people who are in this ecosystem, project developers, the end buyers, can no longer see the practical benefits of what you're doing, you've already lost. And so it's our job to convince people that there are tangible, impactful, practical benefits to be generated out of this. But it's going to be a journey, and it remains a very nascent market. And so give us time, and hopefully we'll bring you there.
I think for me, when entering that space, which was quite mind-blowing to, having spent most of my business life in corporate contexts, that the supportive element within that ecosystem is quite mind-blowing, as I've said. So I'm not sure what the sense is that you got from today, but we're sitting here representing 3 completely different businesses, but trying to sing from the same hymn sheet and try to come across as aligned as we possibly can. So we've already met on various different occasions. We're interacting as businesses, even though both have a marketplace element to their business model, but we see a strong synergy between the two spaces. And I think the true power for me, and that's kind of the takeaway that I want to get to, it sits within that power of that entire space. So it would be fairly easy for us as a marketplace to get into tokenization as well, because it's not that complex in the end. But what we actually do see is that we would want to share our relationships that we build in the market. So for example, we have a very, very strong relationship with Elkit as one of the biggest project developers in the world. And we've already been on quite a few meetings and happenings together with them. And they're super keen to start that blockchain tokenization native on-chain journey with us. But instead of getting dragged into that and starting to do tokenization suddenly, we actually would want to partner with partners like Thello, for example. There's Toucan out there. There's Flow Carbon, which is about to enter the market. So there are quite a few players in the ecosystem that we would want to partner with, because what we aspire to be is the best possible solution on the application layer, right? So we want to be the ones visible to the demand side as from a customer perspective, but everything else is more of a stakeholder management. So we don't need to be mediocre in tokenization. There are players out there that are crazy good at that. So instead of us trying to cover the entire supply chain as you would be used to, it is about unleashing the power of the entire ecosystem. And I think that's one thing that I would want to see as a takeaway, that is not just something that we pretend to be doing when on stage, but we actually cross over and work quite closely together on a very regular basis in that ecosystem.
I maybe want to make a more general point as a key takeaway. So thanks. I mean, of course, I agree with both of you, but I can't have the same key takeaway. So what I was always thinking about, let's say, the climate crisis, the biodiversity crisis that we're in, or all the development goals that are not achieved, is that they're not achieved because they're seen as a cost, and they cost a lot of money, and no one wants to spend a lot of money for where there isn't a clear benefit to them or their organization. And in refi, what we're really trying to do here in many different ways or different aspects of problems, but in the end, it's the belief, and I think there have been some good proofs that this is something that works, that the climate crisis and the biodiversity crisis are not only just a risk that we need to hedge against or account for, but it can also be huge business opportunities if you just come up with a system where that works. And importantly, it's not just a business opportunity for investors that have a lot of money to invest, but it can also be a business opportunity for local communities, indigenous populations on the ground, because these are the people that are most affected. And this is a power that I see in refi and that I haven't seen in different spaces before.
Great, thank you. Well, I see us finishing up a little early, which is probably not against the rules at this late in the evening after a long day. But if there's any last burning comments or questions from the audience, we do have a bit of time. Go ahead.
Sorry. That's all right. No beer yet. No, just one question. If I just look at the space and the demand at the end for carbon credits on the voluntary markets, one of the bottlenecks is clear access to projects. And for me, it's not a surprise that so far you act on basically existing carbon credits through Vera whatsoever. But in the future, that has to be different, obviously, you know. And there will be a fight for those projects. There are not sufficient projects around. Eventually, I don't know the market well enough. And how do you win that battle against the large ones like a South Pole? And they obviously will not give up that space so easily and will have sufficient demand to cover that supply by themselves eventually.
My answer would be short. It would be forward purchases. So there are so many financial entities leaning into this space right now, both on Web3 but also Web2, who see carbon as an emerging asset class, right? The supply-demand dynamics suggest that prices are going to go up. All of the data analytics show that, you know, NBS, so nature-backed credits with a lot of SDGs, so high impact, actually withstand downturns very well. So when you're thinking about building financial asset portfolios, you know, there's nothing better than, well, there are better things, but carbon credits is a really interesting asset because it's de-risked and it's, you know, not correlated to the rest of your portfolio. It should be appreciating over time, and it has tremendous climate financing. So I would say that, you know, securing future supply, just pre-finance now. And that's going to be so important for liquidity, the future liquidity of the market. And most importantly, it prevents all the tipping points that we're seeing in the climate crisis because we're able to act now. We're unlocking finance, we're de-risking it, and we're creating a better market in the future.
I think it was covered, like the insurance aspect and the pre-financing, because the pre-financing is the reason why South Pole is untouchable at the moment, because the one with the biggest pockets can kind of dictate who's getting money, if any, right? So therefore, by democratizing the access to capital and financial, like liquid metal, is the key forward, right? So there are quite a few out there, and I think all of our solutions aim to funnel as much money as possible and quickly to the respective sources. So that's why I think we need to start with the ones in the middle in a way, as in we need to start with the project developers that are already good-ish positioned, but they still need the support, enable them first, and then there's a certain money within that refi system that then gets readdressed to smaller and smaller players, if that makes sense, right? So I think it's about the starting point, enabling that principle to kick off. Once there's genug, a German word that I just slipped in, sorry, enough money. Once there's enough money in that system, you would then see it reaching further and further down in the chain, if that makes sense, right? But the starting point to unleash that dynamic is the key point, and we're in the middle of that. And then I think the true power can be catalyzed in the end.
What's still missing for the compliance markets to be brought on chain?
So that's a very good question. I wouldn't try to fathom an answer, at least an intelligible one. So I may pass that on. I think one of the biggest hurdles is simply kind of government involvement. Governments tend to be slower. I mean, I know very well. I used to work for the UK government for 6 years, and so when you're talking about that journey of innovation with governments, it's simply a bit longer because there are a lot more checks and balances, and rightly so. That said, so I'm kind of deviating from the question a bit, but there's been, especially in the last 6 months, a huge plethora of really interesting kind of public-private institutions who are really pushing this. So I think it was just 2 weeks ago, the World Economic Forum released a coalition on a kind of a tokenizing, I'm not sure if it's unique to carbon credits, but it might be kind of nature-backed assets. So the public sector is really will soon come behind it. I hope that there's a lot of applications and kind of compliance markets as well, because that'd be great.
I think, well, obviously that's not a claim that might be the case, but quite a lot of players from those markets are having to shop in both at the moment, right? So they're not only going for the regulated ones because there's just not enough supply, they actually do have to tap into the supply that is in the voluntary carbon market. And I think latest with the reporting requirements, that will lead to problems because one can be reported differently than the other. And I think there's potential in there from my perspective that suddenly those reportings look very weird because they're different data sources. And I think that has the potential to trigger quite a significant process there.
All right, I'm gonna do my my best attempt at summarizing, kind of maybe iterating upon our key takeaways based on what you all said. So what I'm hearing that what you're creating and what you've started, where you're going, is a truly competitive market where there's lots of players collaborating and cooperating. So we're really not trying to compete, is what I heard. That getting money to the right people, so those most affected by climate change are actually really profiting and able to get the resources they need to deal with those impacts, and that you're making really positive impact and positive externalities profitable to the entire market. Yeah? All right. Well, thank you all. Have a lovely evening. I have no idea what's next in the agenda, but I think that there might be an apéro. Is that correct? Either at the conference.